The Laundry is proudly produced by Strise, your AML automation software for faster onboarding, smarter monitoring, and growth without overhead.
The overarching message I feel from regulators is that innovation doesn't exceed financial crime controls. I think the fines and investigations can be more than just penalties. They can send a kind of shock across the ecosystem.
Welcome to The Laundry, the podcast connecting AML, compliance, and financial crime to the real world. Hot coral cards, instant money transfers, fast onboarding, mega funding rounds. Back in the 2010s, fintech was on fire.
The fintech scene in Europe keeps getting hotter.
The financial platforms of the future are not going to be your traditional banks, but the technology firms.
You've had so much user growth. 1 million users per month.
Dutch payment processing firm Adyen is planning an IPO, and it's valued at more than $8 billion.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
They are the two words all millennials seem to be using these days. Venmo me!
The finance app also operates like a social network and lets you comment on payments, seeing who and what your friends are spending on.
The name Venmo comes from the Latin vendere and mobile, and sort of bringing those two things together.
For all of 2018, the app processed $62 billion in payments, a 79% increase from a year earlier.
Some of the most game-changing technological innovations that have transformed the way we live have become part of our everyday life.
After the financial crash of 2008, the old banking system was broken. Trust in big institutions was shattered. The global economy was on its knee. People wanted an alternative. Fintechs brought the minds of Silicon Valley and put it into current accounts, money movement, wages, payments, and savings. The likes of Monzo, Starling, Revolut, and Klarna quickly moved from record-breaking crowdfunding campaigns to huge investor capital from Sequoia, Tiger Global, and Andreessen Horowitz, who declare that every company will be a fintech company. So far, so good, right? Here's where having one foot in the startup world and one in the compliance game can give us that extra perspective. As the cash flowed and growth at all costs ruled the day, the fintechs scaled. Fast forward to today, they're now moving money and serving customers on par with the banks they aim to disrupt, and rumors of big IPOs are swirling. But the world has changed. Sanctions have tightened. Online crime has evolved. The same frictionless onboarding and instant money movement that has made fintech has become a valuable tool for money launderers, sanctioned individuals, fraudsters, scammers, and terror financiers too. The pendulum is shifting on these disruptors, who now face much of the same pressure as the big boys of banking.
Cash App is being ordered to pay back tens of millions of dollars to customers who were victims of scams on the money-sharing app.
Yeah, this Cash App will have to pay up $120 million to customers who lost money to scammers and fraud on the money-sharing app.
Klarna Bank has been fined $46 million for violating anti-money laundering rules. Sweden's financial regulator said a review of the Buy Now Pay Later company for the year ending March 2022 had found significant deficiencies.
UK financial regulators fined Starling Bank over $38 million for failures in financial crime prevention. The Financial Conduct Authority imposed the fine for breaches in Starling's financial sanctions screening system and opening accounts for high-risk customers.
Fintech has revolutionized how we move money forever, for the better. There is no going back. So how do we keep that spark of innovation while satisfying the regulators and protecting our economy? Or do we risk killing fintechs altogether? I'm your host Marit, CEO of Strise, and in this episode we are revealing how fintech grows up and gets compliant. And to dive into this topic, I'm here with Craig McLeod, Head of UK Financial Crime Compliance at FTI Consulting. Craig works with financial institutions, regulators, and public service institutions to address financial crime. He has over 15 years of consulting experience in the financial service sector. Welcome to The Laundry, Craig. What's your favorite part of your job?
Thank you for having me. I think from my favorite part of my job, I think with working with lots of different types of firms, from, we'll talk about fintechs today and large institutional banks and gambling firms, wherever it might be, I think what I find most interesting is the nuance and how different firms respond to those macro challenges differently. So it certainly keeps you on your toes, and it means that we're always learning as well.
Let's kind of start at like how people view fintechs, because Strise, we are a technology company, so I feel I have one foot in like the tech world and one foot in the kind of compliance world, which is an interesting point of view. And in the tech world, it's all about move fast and break things, grow your customer base as fast as possible, like grow revenue as fast as possible. And of course, it's quite easy to be a fintech if you, let's say, on the customer onboarding, you just don't care, you just take on anyone. That's a very good way on growing your customer base. But of course, that's not how it works in financial services. But with your expertise and your experience, how would you say this the compliance aspect has been handled in fintechs? Has it taken more of a backseat to other priorities, or is it front and center?
Yeah, I mean, it's a great question. I mean, and without oversimplifying things, I'd say that every financial institution, when it comes to financial crime, is typically trying to balance three things. They're trying to balance regulatory compliance, operational efficiency, how do we reduce our cost of compliance, and customer experience and customer acquisition. I think they're the kind of three elements. I think from a fintech perspective, over a long time, the focus has been on speed, has been on agility. It's, as you say, it's been about breaking things, doing things quicker and faster. And I think that has meant that the regulatory compliance element has been less of a strong force. If we compare that to a large traditional financial services institution, over the years, there's the pressure from reg compliance has been strong, and therefore that kind of dynamic and that center of gravity, I would say, has been different. I wouldn't say that's necessarily around negligence from a fintech perspective. I think that it's been around sequencing priorities. I don't think they've necessarily ignored compliance. But, fintechs in that kind of startup mode, offering less complex products and services, perhaps operating in less risky jurisdictions as well, has meant that the compliance element hasn't been as strong. But certainly what we're seeing today is that fintechs are growing up. They're now, significant organizations that have, are inherently much more complex. And I think therefore that reg compliance piece comes to the fore. So, has it been a focus? Yes. Has it needed to be as strong a focus? Probably not. But I certainly think that's changing now.
Yeah, because I was at a AML networking event earlier this week with a lot of banking people who are head of AML and et cetera in banks, and a lot of banks, they are like complaining a bit about certain fintechs, so to say, because they can see clearly that a lot of fraudulent transactions kind of go between their bank and certain fintechs, which are quite hard to kind of work with as well. You can't easily call them up. Like, they take a few days to reply. Like, they're not that into compliance, let's say, as them. So I feel that kind of there is a little bit of a divide in the industry as well. I don't know if that kind of resonates with you.
Yeah, for sure. I mean, I think that gap is closing, though. I think if we look at some of the regulatory pressures, some of the big high-profile cases, some of the the larger fintechs, payment firms, challenger banks, they're definitely starting to be scrutinized more by global regulators. There's certainly some big examples in the UK. So I think that, yes, I think there's historically been that frustration as a traditional bank looks into a fintech. And certainly speaking to that community, I think that gap is closing. I think we're starting to see the kind of pressure be a bit more even across those different types of firms. So it'll be kind of interesting to see how that plays out for sure.
Do you think the fine has a lot to do with it as well? I mean, Starling Bank was fined almost £29 million by the FCA for breaches of financial crime requirements. Lithuania Central Bank fined Revolut 3.5 million euros. So there's been a couple of big fines, but again, there's been, like, the FCA dropped its criminal investigation of Monzo for potential breaches of AML. So is it the fines that kind of pushes these fintechs more into compliance and not just like customer growth at all costs?
I definitely think it's part of it. It's a combination of factors. The overarching message I feel from regulators is that, innovation doesn't excuse weak financial crime controls. I think the fines and investigations can be more than just penalties. They can send a kind of shock across the ecosystem, which I think is quite interesting. You see peer institutions, you mentioned Starling Bank and others, what happens if you're a competitor in that space or another fintech, and how do you respond to that? I mean, I think also, none of this is new, of course. In the FCA, from a UK perspective, have been sending dear CEO letters to the challenger bank community, to e-money institutions since 2021 now. So I would say that, certainly that this has been coming, and I would say that the regulator has not been particularly subtle about it either. So, I think that some of these firms should not be surprised that there's been a sort of tightening of, regulatory supervision, in this space. The Starling Bank's a really good example as well. They've been consistently ranked as, the best in the business when it comes to customer satisfaction. Now, their success with the customer hasn't shielded them from regulatory scrutiny. And if anything, it raises the stakes. I think it puts customers in a position to say, do we still trust these institutions, that we have been raving about, this experience we've been getting? So I think that kind of all factors in. So yes, I think enforcement, I think fines do send a strong message. I think the other types of regulatory communication enforces that. And now, fintechs is about proving that you can be both innovative and compliant, which is the sweet spot.
Okay, having covered the impact of big fines and how they've spooked compliance teams, we'll be right back to speak to Craig about fintech's biggest compliance mistakes and how crypto fits into those risk appetite decisions. Don't go anywhere.
Live on stage at Venue 81 in Stockholm!
Want to energize your next event with something truly unexpected? Live on stage from Shoreditch Studios in London. The Laundry Live brings financial crime and compliance to life on stage, with laughs, insights, and a healthy dose of drama. Live on stage at the Ministry of Sound in London! From packed out venues to intimate in-house tapings, we've done it all. A live recording of The Laundry is the perfect way to engage your audience and bring fresh energy to your agenda. Stockholm, please make some noise! We love hitting the road, so if you're planning an event, why not add a little podcast magic? Email us at laundry@strise.ai to get started. We'll bring the microphones, you bring the crowd. We'll continue the discussion over pizza afterwards. I'm interested to learn more. After working in this industry a little bit, and you hear all the crazy stories about how, let's say, easy it can be for criminals to get a bank account and do different types of frauds, etc. I'm becoming under the opinion like, oh, it should be super hard to get a bank account. No easy customer journey here. Like, it should be friction. Like, let's not get the bad players through, especially on the corporate side, because I think that one has a big potential there. But you've been working with a lot of different clients in the, let's say, fintech sector, however you define it. But what are some of the biggest compliance issues or mistake you've seen? Like, when you start working with them, you're like, oh my God, what is this? Like, I'm not talking about small things, but the big, this is crazy that they do it this way. Like, what is going on kind of type of mistakes?
I mean, I think these organizations are structurally very different. They've got much more fluid 3 lines of defense models in terms of how they kind of run their financial crime or second and third line businesses. And some of the blurring of those lines can be quite scary at times when you kind of see who's doing what. I mean, in big institutional organizations, it's very clear who sits where, and that, there's lots of key person dependency risk in these fintechs. They're more agile, they're typically have less headcount. And sometimes that can be a bit scary when you kind of see the kind of personal responsibility placed on certain people. You can kind of question, well, that's a lot, that sets a high bar there. So there's some of those structure elements for sure are quite big, yeah.
I can imagine. And like one person doing it all, like the one person is first, second and third line of defense and like auditing themselves almost.
Yeah. And they kind of the marking your homework analogy and things like that kind of creep into it as well, right? But it's tough. I mean, how do you scale up from a people perspective and get that delineation of roles and responsibilities in the right way whilst not creating functions that are out of control and not proportionate with the size of the business? I think what's really interesting now is we get into this environment where, with the regulatory pressures increasing, with certain fintech organizations, you almost see them going the other way. It's almost like an correction. And I think some of the big weaknesses, and certainly challenges we see is firms that start to gold plate. They start to think about best practice. They're almost spooked by everything that's going on around them. I think one of the big challenges fintech organizations face is how do you comply with financial crime regulation, but in a proportionate way. The regulations are still call out proportionate control frameworks. They talk about risk-based approaches and things like that. But then, we see a lot of organizations that see these fines, see what's going on in the broader environment, and they overcorrect. And I think that leads to a whole bunch of challenges. It doesn't necessarily make you any more compliant. It certainly doesn't help from an operational efficiency perspective. So we'd say we're seeing less of those sort of pre-2021 fundamental issues, but we're kind of seeing it in a different way now. And I think that's been quite interesting to navigate.
What is it that you expect to see from the regulators in the next few years? I mean, there's going to be the introduction of AMLA, for instance. There's the trend with the APP fraud reimbursement, maybe more sanction packages, or now maybe a bit less with the Syria being, some of the sanctions being lifted on Syria. But with these trends we're seeing, what do you expect from the regulators in the next few years?
I think we're entering into a really interesting phase, not just about more regulation, but more strategic regulation, I would say, as well. On the one hand, there'll be, you mentioned AMLA, and I think that kind of brings in that consistency across the EU, and the EU kind of really leaning into being more coordinated and more assertive when it comes to financial crime preventions. So that, for me, is tightening the screws. But on the other hand, we're also seeing governments coming out and talking about promoting growth and perhaps lightening elements of the regulatory environment as well. So for me, that I think becomes a really interesting element to navigate if you're a financial institution. And on the one hand, conforming to more tight regulatory oversight, but at the same time, kind of individual geography level, perhaps having to deal with that kind of growth piece. And what does that look like? And so I think that's an interesting piece. You mentioned the PP fraud, and I think that clearly has been a big shift. I wouldn't be surprised if other jurisdictions started to introduce, regulation and rules similarly. I think that's certainly from a consumer perspective has been positive. Crypto is going to be a big one. I think, certainly in the UK, there'll be there's consultation just now around crypto regulation, and we were expecting something on that to come out from a UK FCA perspective towards the end of the year. And that'll certainly be a big shift. We'll start to get crypto exchanges authorized by the FCA, which will be a big change, aligning crypto firms more closely with traditional financial services. And I think everybody's, within the fintech space in particular, is really interested to see how that shakes out. And I think what that will do is create a credibility gap. Firms who can meet these new regulatory requirements from a crypto perspective, will get legitimacy with partners, with regulators, investors, etc. But also those who can't, we might see some of these institutions exit markets like the UK. So it's a really interesting piece, like I say, with some deregulation, with increased regulatory scrutiny and aligning across jurisdictions. I think that'll be a really interesting space for the next year to 18 months.
I like the strategic regulations. I like that terminology that you said at the beginning here. But how does fintech grow up and get compliant?
I think the overarching piece is how do you increase your compliance of your financial crime frameworks, but also still managing to embrace that speed and innovation, which is kind of really core to the business. I think that's the overall exam question here. For me, I think having proportionate financial crime frameworks that match your risks, I think that avoids you gold plating and unnecessarily slowing down. I think it is a kind of key element to that. So not just copying the financial crime controls of bigger, more legacy type financial services institutions, which we see a lot. We just kind of see them lifting and shifting these frameworks. And I don't think that really kind of meets that exam question. I think from a people perspective, it's really important. How do you bring in people who have that really strong financial crime regulatory experience, but they're also really tech savvy and they can apply that in that, kind of innovative environment. I think those people can be quite hard to find. So I think it's really important, the people strategy of these fintech firms as they grow to again blend those elements. I mean, I think the last piece is just really around creating a culture of accountability, where compliance isn't just one person's job, but something that's shared across products, ops, engineering, leadership, that tone from the top. I think that certainly for me helps set that tone. And as these organizations mature, I think they can mature in a way that balances that flexibility and speed, but also, stronger financial crime compliance.
I agree. And one thing I want to share here, it's something I think I've said it a few times on the podcast, and this is from the Chief Risk and Compliance Officer in Vipps Mobile Pay, which is one of the largest mobile wallets in Europe. It's like a huge share in the Nordics. Even though they have like a large customer base, they still define themselves as a fintech. And there, to try to kind of balance the compliance with the innovation aspect, they had developed a concept called the early bird principle. So the Chief Risk and Compliance Officer, she was like, our job is to say yes if you invite us in early enough. So the earlier you invite us in, the easier it is for us to say yes if you want to develop some new product or want to change something, in the onboarding flow or new product or whatever it is. Early bird. The earlier you invite us in, the easier it is to say yes, the easier it is to continue to innovate. But since then, someone thinks is like complete opposite innovation versus like compliance. They just want to bring in compliance, like, oh, let's not get them involved. Let's just like develop this new product. Like, let's ask them at the end. But that doesn't work, obviously. And then you get the like friction and, so yeah, early bird principle. I thought that was like a good one. And it's it's a nice concept that you can build a lot of like culture around. Let's invite them as early as possible. Let's have meetings early in the morning. I mean, it's something that you can easily build a culture around as well. So that is like one tip that I've picked up here during the laundry that I would like to share with all of our listeners.
Yeah, I think it's a great one, and fintechs are really well placed and better placed than, some of these large banking institutions to do just that. They can work in a more agile way. They often embrace technology in their day-to-day way of working as well, and how they can kind of bring in compliance in that kind of early bird way. They're actually geared up well to do that, and so yeah, I mean, I think it's a great analogy and one that, from a fintech perspective, if more embrace that, I think they'd be kind of leaning into and facing the challenges they have ahead well, and be well equipped to do so.
Yeah, definitely. And and you can draw up on in a fintech, you usually have a lot of product people who are specialized in building products. That might not be a team in a bank. That might be like external consultants, or you bring someone in for a project. So that is definitely something to like a competitive advantage that they should lean into. But before we end the episode, I just want to dish out some quick fire questions for you. So I'll say something and you'll say the first thing that comes to mind. Shorter, the better. Are you ready?
Yes.
What's the one thing fintechs and payments have traditionally misunderstood about the role of compliance?
I would say that compliance drains resources. It's a misunderstanding. Good compliance pays off. You're not just avoiding fines, but also building trust and driving growth, and gives you that platform. So I would say that's a misunderstanding.
True. Actually, yeah, I agree. Really good answer, actually. What's the most common piece of advice you give to companies about risk appetite and compliance?
It's a good question. I think risk appetite becomes a market signal, right? So I think if you're too aggressive from a risk appetite perspective, you might end up scaling fast, but end up in regulatory troubles. I think, there's lots of internal elements to your risk appetite and how it covers your policies and procedures, etc. I think also the message that risk appetite sends out externally is really interesting as well, and particularly from a fintech perspective. If you're too conservative, you might stifle innovation. If you're too aggressive, you might end up in regulatory scrutiny. So I think for me, that's an element which is often not thought about because it's external. But it's definitely more and more relevant today.
Why does the risk appetite of big fintech players matter in the real world?
I think, as I was saying, it's these fintech organizations are now a really important part of the fabric of our financial ecosystem. They used to be startup firms and were viewed as so, and now they're they're part of our everyday lives in some cases. So again, I think the tone in which these organizations set, the risk that they're willing to take on, some decisions they might want to take about being more conservative in different areas around channels and countries. I think it's important, and I think it really kind of sends a message to the consumer as much as it does to the regulators. So I think it's a really kind of important part of how fintechs operate.
Yeah, I also, just to go back to the other question, it's like, I don't think a lot of fintechs think about the fact that like their risk appetite will eventually trickle out into, let's say, the real world where the consumers live, and they will get a perception of the kind of risk appetite as well, and that will impact whether or not they do want to choose your brand or not. Because today consumers have a lot of alternatives. You can stick with your high street, like your bank, you can go with a fintech, or you can go with the new fintech that does like exactly the same. So I think, again, that is underestimated by the fintechs themselves.
For sure. I mean, there's a lot of nervousness and misconceptions perhaps around crypto. If you were to see a fintech firm that was kind of really leaned into crypto and offering crypto type offerings, that's a risk appetite decision, but one that certain customers might feel quite nervous with, right? So I mean, I think that's an example of exactly as you say, that perception and the risk in the products and the risk you're willing to take on might be too much for consumers. So I mean, I think that's all in the mix here.
That brings this spin of a laundry to an end. Craig, thank you so much for joining me. If people want to connect with you and continue the conversation with you, where can they find you and do so?
So they can find me on LinkedIn, Craig McLeod, and at FTI Consulting.com as well.
Money makes a world go round.
Thank you so much for listening, and please do reach out to our guests and connect with them. The community of compliance professionals is amazing, so just connect with each other and continue the conversation. And if you enjoyed this podcast, check out the back catalog of more than 120 episodes of The Laundry and follow us on your podcast platform of choice. We're on Spotify, we're on Apple Podcasts, we're on YouTube, we are on all the major platforms. If you can share the podcast, even better, drop it in the group chat, give us a 5-star rating. It really helps people to find us, and we do want to get all of our expert interviews out there into the compliance world. And if you have a subject you think we should cover, comment on Strise LinkedIn page, my LinkedIn page, or email us at laundry@strise.ai. Your host for this episode was me, Marit. Our producer was Matthew. Our editor was Dominic, and our engineer was Nicholas. The Laundry is proudly produced by Strise, and we automate your AML work. Visit strise.ai for more information. See you next time. Today at Strise, we're having like a PJ Friday, and I forgot I had the laundry recording when I put on my PJs this morning to go to the office. The Laundry is proudly produced by Strise, your AML automation software for faster onboarding, smarter monitoring, and growth without overhead.